Good afternoon, ladies and gentlemen. Sakshi and I are back a little early this time, and this time again with Market Masters in our ongoing series to sort of explore and dig deep into the budget document to find out better stocks, better investing themes, and better ideas for you all. And this time we have Mr. Deepak Shenoy, founder and CEO of Capitalmind with us. Mr. Shenoy manages 2100 crores over 5 portfolios, of which 50% is almost in momentum stocks and about 600 crores in Surge India, which is a flexi cap scheme from his portfolio management stable. Namaste Deepak ji, a very warm welcome to you. I'm sure you've sort of gone through the budget document with a tooth comb and a magnifying lens. Now tell us, what does it hold for the market apart from the pain on the taxation side?
Well, I guess everybody's only going to talk about the pain from the taxation side, but interestingly, the budget is actually quite good from the perspective of allowing two things. Keeping the investments on as earlier recorded. So you had an interim budget where they made some plans and proposals, and they've kind of added on to that. They've added a layer of job-related incentives, which is good because it reduces the burden on companies when they're hiring, which may be an incentive for people to get at least temporary employment to skill themselves up before they finally get employed. The second layer is they haven't introduced a whole lot of freebies, which is important because otherwise the subsidy bill is fairly large. I don't think we should discount that. It's one of the largest expenses after interest and defense. The last bit is, of course, they borrow a lot bit less. So they've actually accounted for 30,000 crores less in interest costs compared to the interim budget. I think this is because A, they borrow less, and B, the interest rates themselves have fallen to below 7% for long term, which was different from what it was in February. So in that context, I think the interest costs have come down as well. Hopefully we'll get a rate cut, and that will also reduce our interest costs. And this is from the perspective of government expenditure, it's a good thing. Now the revenue, the fact that they've burdened middle class taxpayers and people who are relatively just about starting to be invested or starting the investment journey, that is a little bit of a disappointment because today you have a bunch of other areas where you could raise revenue and going to hit the capital gains and even income taxes, because income taxes slabs should have been increased much higher because we've been at the same slab for nearly 8 or 9 years. Inflation has increased our incomes and expenses dramatically. So we should have at least seen an upgrade in the slabs from the largest slab being just 10 or 15 lakhs to maybe 20, 25 lakhs. That would have caused at least some layer of relief. But yeah, otherwise, the revenue raising, is coming now from multiple sources, not just personal taxation. There's GST, there's an RBI dividend, there is a bunch of other things that are also on the table.
Mr. Shenoy, what happened yesterday in the budget, does it have the power to directionally change anything in the market?
So budgets are no longer the biggest driving force for markets anymore, Sakshi. I think to be fair, people look at the budget as from the past, all big announcements used to happen only in the budget. When the government cut corporate taxes, it was off the budget. When the government increased, I think last time when it increased the gold import duties from 12.5 to 15%, that was also, I think, off the budget or just around that time. We've seen this change, GST, for instance, is entirely off budget. You cannot ask for a GST change in the budget because it's not a central government thing at all. So given this, I think the budget will just give you a policy framework of where we're going to go from here. They've given a lot of those policy guidelines saying, listen, we want 1 crore jobs, and therefore 1 crore jobs are going to be funded over a period of, say, with about 10 lakh crores from the center, of which we would do 2 lakh crores this year. That means they're going to have to do it, for every year going forward. That's a good policy direction to take, and the budget is the time to reveal that. in this particular case, I think the market did not expect anything big on the upside. So that's why the market's not down too much, I think, because you didn't get too much of the downside that you thought you would get. And overall, I think the structure is that they've increased taxation on certain elements, which makes individuals relatively unhappy, but they haven't changed anything on the corporate tax front. They haven't changed anything much on incentives. They've continued to be incentives for corporate entities to continue to produce in India. And you haven't changed much of the infrastructure in railways and ports investments, which is also good because that means they're going to use the money that they're getting to build more infrastructure for India. So I think industry-wise, very positive. Markets, how the market will react. Some part of it may, be visible in the next few days. But I'm kind of surprised that the market has not, kind of fallen today. Last time, the day after the budget, it fell some 3%. Today, I think it's down, but not down meaningfully.
Deepak ji, I think we should thank our lucky stars that a lot of, a wide variety and people of different financial strata have taken this buy the dip philosophy to heart, and they pour in money at the critical moment that is required, which was yesterday and maybe June 4th as well. And let's hope that philosophy continues. But a slightly longer term question, and this is more relevant to you because 50% of your AUM is into momentum stocks. Sakshi has been worried that we are headed for a time correction or God forbid a deep correction because we've rallied so wonderfully well over the last 18 months. So for momentum players such as you, do you think it is a time for pause?
So the point about momentum is you can't predict it. So if you try to predict it, you would have gotten out maybe 6 months ago. There are lots of players who said it was over in January. It's been up 30% since January. So it's not like you can predict when it's going to end. You don't know when it's going to start also. So a true blue momentum player would actually tell you that something is not working only after it has not worked, not before.
Yes.
Which means it should not be working right now, but it is. So therefore, at this point, there is no reason for me to believe that it's over. I know that it could, of course. There are lots of headwinds, So honestly, we had headwinds all the time. There was a crisis in Ukraine. We didn't flinch so much. There's an Israel and the war in Gaza, and we didn't flinch so much. There were massive financial events last year. SVB, which Silicon Valley Bank is larger than the size of HDFC Bank. It collapsed in the US and nothing changed. Our markets didn't flinch at all. So a lot of things that you think affect markets don't. So sometimes market reactions are very different from the theory. So the practice is different from the theory in that sense. So it's better to react. Even today, there are momentum stocks making new highs. There are other momentum stocks that are losing out. And the concept of momentum is you ride your winners and you get out of your losers. And if you continue to believe in that philosophy, then you have to stick with whatever is the winner tomorrow. Not that I will bet on one sector and I think that sector will do well. But I'm getting into a sector because it is doing well in the market, and when it stops doing well in the market, I get out. As long as you have that philosophy, I think momentum will have its rough times, but it will not necessarily allow you to predict when it is over.
So, Mr. Shenoy, both tactically as well as in your long-term portfolio then, has the budget made you rethink or change anything at all?
Not too much. In fact, we were talking about it right now, saying the only thing that it might allow you to think about a little more is how you position yourself in some of the stocks, because we honestly expected maybe some more announcements on PLI. So we were ready to pick up a lot more of certain stocks where I think PLI would have increased. But since PLI is roughly the same, it's not much of a surprise. That change may only happen in the next budget. So
I was just about to say it, you are just 7 months away from the next one. So maybe your wish could be granted.
Yeah, it's so since we are a little bit more reactive, we don't like predicting stuff, so we like to react. So we're more like, okay, if this happens, we're going to do this, but when it happens, we will take those actions. Right now, we're not. So nothing meaningful has changed. We had a little bit of cash, a very tiny amount of cash in our Surge India portfolio, and that has anyway gotten redeployed. Yesterday was a good day to deploy part of that, and so on. But by and large, I don't think this is a market in which you should retain a whole lot of cash. From a fundamental aspect, the strength of the underlying market seems unnaturally high, and I've seen this in the past that market gives you opportunities a few years out of a decade. If you sit out those few years, then your returns are very mediocre. तो जब गाड़ी चल रही है आपको गाड़ी के अंदर होना चाहिए. That is the philosophy in Indian markets. It is always scary because you're riding a tiger, like I called it once. It is a little bit of a scary feeling that when everybody is fearful and everybody is warning you that the markets are high, that you continue to be investing. But I think that's the best time to invest. The worst time will be when everybody is telling you to invest, and then you should be more scared than anything else.
Absolutely. I think this is wonderfully summed up, that returns in equities are bunched up and they don't happen as mutual fund charts explain to you कि हर महीने सिप कीजिए और 1% निफ्टी हर महीने बढ़ता है, कभी कभी तो 8% नीचे गिर जाता है. And that's the beauty of the market, that the sheer unpredictability of it all, but at the end of the day you make a lot of money. Deepak ji, let's look at your other fund, which is the Surge India fund, where you have 650 crores invested. How many stocks are there in that AUM and corpus?
So right now, between 31 and 35 stocks, we always maintain between 30 and 35 stocks in that portfolio. That's basically, it focuses on some themes which we found very attractive in India over the last, especially after the Ukraine war, when things changed. We decided to focus our energies on a few things that we thought will happen. One is that we will substitute imports, and that's still happening, by the way. Whether it is increasing duties on solar panels to allow for more manufacturing in India, or by reducing the customs duty for all imported minerals that happened in the budget yesterday. The idea is because you set up more manufacturing facilities in India, you should use domestic production. Now, this domestic production not for export, it's just for producing in India and using in India itself. So you don't really need to export. You just need to reduce the amount of imports that we do otherwise. We use a lot of imported goods, from keyboards to monitors to what have you. Almost everything is imported. So if we start manufacturing a few of these things, our imports would reduce. And import substitution as a theme means a lot more domestic manufacturing. It also leads into a lot more domestic consumption, because if you manufacture here and you have a lot more people in India using you're paying them salaries, they're getting richer, they're going to consume your goods, they're going to premiumize at some level. जो पहले दूरदर्शन वाला टीवी हुआ करता था, one TV channel, today you have 40, and you may be have another 30 on the internet, and then you have YouTube. So there's a premiumization at some level. Every niche gets its own channel. Tomorrow, every type of coffee will have its own coffee shop, perhaps. So, it's the number of noodles that you see when you visit a store now, and the range of prices that you can buy noodles. 20 years ago, you got like 2 varieties, maybe 1 variety and 1 imported variety. Today, you have 30 made in India. So I think domestic consumption is another big theme. Sorry, I'm just going on with it.
No, not at all. We started with Maggi and then we had Maggi masala. It was such a change.
Yes, it's been there.
Right. Mr. Shenoy, I want to now ask you, the focus slowly and gradually will also shift to how the US markets will be reacting. Of course, there'll be now US elections, and then, how the Fed will move on the interest rates front. How is that likely to impact the next 6 months and the market's trajectory back home?
So I think we will see a reduction in Indian interest rates only after the US reduces. interest rates. That's unfortunately the name of the game here, because our inflation is less. We know this. Our core inflation is 3%, our headline inflation is 5%. And while we might argue that I paid 500 rupees for a radish yesterday or something like that, I think the anecdotal inflation is much higher than the real inflation on the ground, because last year what you were paying for a liter of diesel or petrol is roughly the same as what you're paying today. And it's the same as what it was maybe 1.5 years back as well. So there's been no inflation in some of the core items that you pay for. Some of the items you're not, you're going to be paying a little more. But given this, we should have seen lower rates. Our current economy needs much lower rates. They're all complaining about deposits. Why is there no deposits? Because if you're growing at only a nominal 10%, you can't have interest rates at 12%, because the banks get to borrow at like 6.5%, 7%, let's say, on the wholesale markets. They want to put a 5% margin on that. They want to lend at 12 at least. So if they're going to be lending at 12, but your growth in the economy is only 10%, because you have low inflation, आपको 8% या 9%, 7% बनाने के लिए, 7% growth के लिए, you need only about 10% nominal growth, right? So you're for real growth of 7%, you'll get about 10 to 11%. So at 11% growth and only with 12% interest rates, you're not going to get borrowing. Corporate borrowing has collapsed. First it was the IBC, but now recently, even though companies are very, very strong, you're not getting anything meaningful in terms of corporate borrowing at all. So a lot of people who borrow for BNPL and to buy something on some online portal and so on. But you're not getting as much growth in corporate borrowing as they should. We should have lower rates, but hopefully when that happens, the lower rates will trigger a credit boom again across the ecosystem, and then we will be able to see stronger, our stronger corporate balance sheets being put to use.
Deepak ji, why should corporates be borrowing? Just dilute 1% equity in a QIP, raise 1200 crore rupees, shift 800 crore rupees back into the market, into momentum stocks. In less than 1 month, 800 crores becomes 1000 crores. This is a money making exercise. Why borrow from bank?
That is a valuable question. Though to be fair, there's more risk here than anything else. But
the cost of equity is zero. क्या risk? दीपक जी को मोमेंटम फंड में आप दे दीजिए 200 करोड़ रुपए, उनका हेडेक है.
नहीं, I wish I could guarantee anything like that. But honestly, people, अगर आप मार्केट में पैसे डालो तो मार्केट पे आप डिपेंडेंट हो. अगर आप अपनी कंपनी में डालोगे तो आप उसका फ्यूचर खुद चेंज कर सकते हो, which is more valuable than anything I can do. I tell my customers are sometimes industrialists, मैं उनको ये कहता हूँ कि आपने जितना पैसा बनाया अपने as a percentage, I will never be able to make that. आप 1 लाख रुपए लेके उसको रोटेट करके आप 50 करोड़ बना लेते हो. मैं 50 करोड़ लेके I can what? I'll give you 12, 13, 14%. You would have done 500 times, 5,000 times multiples. So I think businesses can still do that. They have the ability to go and attack a very large market, grow 100x in the next 10 years. I don't think a person like me will have the capability to do it. So ये अगर आप 100 करोड़ raise करते हो तो it may be better, even if you raise it in equity, कि आप अपने खुद के business में डालो.
Actually, Deepak ji, you are being modest. 100x is possible in markets too, and I'm sure you are somewhere in the middle of that ladder. And give it another 5, 7, 10 years, you will be at the top rung. Now, my final question to you, sir, is this kerfuffle that is happening in real estate. There has been an issue where indexation has been removed, but tax rates have been cut. Lots and lots of calculations are going around saying that this is good, this is bad. Because you've analyzed it in detail, please tell us what are the changes, who's making more money now, the government or the poor seller who is now no longer having the benefit of indexation? What's your gut feel?
So, real estate is a very strange beast, Shell. If you own a house, you sell it. You're thinking you're worried about taxation. But if you live in that house, most likely you sold it and bought another house. There is no tax. You can reinvest the proceeds of your real estate sale into another house which you live in, and that's perfectly fine. It's not allowed in anything else. ये नहीं कि मैं Reliance का stock बेच के ICICI का खरीद सकता हूँ and I don't pay tax on the Reliance sale. It is not possible. It's not possible in any other asset class. So it is only this taxation change has happened only for people who are selling and realizing the profit and somehow wanting to consume that profit in something else. They're not reinvesting in real estate. So let's be clear about that, because now it affects a lot lesser people. There are people who buy real estate and then sell it and then buy something else. So for them, it's not going to be impactful. So who is impacted? Oh, somebody who has some inherited maybe property from 40 years ago. Till last year, you may imagine they may be paying 20% tax after indexation. So if you bought a property 20 years ago, it's appreciated a little bit, then the indexation would have given you inflation level. So usually if real estate is going up by say 8% a year, 6% out of that 8% you're getting an inflation, you're getting off from as inflation. So you pay tax only on the remaining 2%. Therefore, a flat tax on that entire 8% hurts you a lot more. That's what the change is. Instead of allowing you indexation, they said how much ever your gain is, it's 8% per year, the pura 8% is taxed. So you're paying roughly, say, 12% of 8%, which is 1% a year. So on 20 years, you'll be paying 20% of whatever your gains are as taxes. It's actually 12.5% of your gains as taxes in total. This is not a meaningful problem really, but it compares earlier saying, oh, I used to have only 2% gains. I used to pay 20% of that 2%, which is 0.4%. Isn't that much lesser? Now, this is also true, but it's also helpful for some people who have got land from say the 1970s. They've inherited it. Now there's a family. They want to split it. They want to sell that land, take the money and buy apartments. When they sell the land today, the price will be the 2001 price, which must have been a very low price. 1 lakh rupee zameen is today worth say 10 crores. 1 लाख पे कितना ही इंडेक्सेशन लगा लोगे? तो मतलब अगर आप 30% भी इंडेक्सेशन लगा लो, it will not change anything meaningful for your gains. You'll be paying 20% earlier on those gains. Now you'll pay only 12.5. So for such people, it's actually helpful who have long-term big appreciation. So one person doesn't get affected who is selling a property and buying another one. Another person who doesn't get affected is getting affected positively is people who have long-term inherited properties who, for whom the prices, the indexation is not matter. It hurts only those people who have bought in the last maybe 5 or 10 years, who are actually planning to sell it and say, I will realize the gains and maybe, like you said, put it back in stock markets. They now have to pay a higher price because they don't have that much gains in real estate. But if your worry is that you're not making enough profit in real estate, तो फिर निकाल के टैक्स पे करके इसमें डाल ही दो ना फिर, why be bothered?
Okay, and while we loved this conversation, we are out of time, so we'll have to let you go, and which we do not want, but we'll take a promise from you that you'll come back very soon. There's so much to discuss about the budget and more that it cannot be completed in just about 20-25 minutes interview. So we'll have to take it next time so that we can see more insights from you for our viewers. Thank you so much, and truly appreciate your time with us on Business Today.
Thank you so much, Sakshi. Thanks so much, Shail.
Thank you, Deepak ji. Very kind of you to come, sir.
All right, viewers, that was a fantastic, enlightening conversation with Deepak Shenoy right there. But do stay tuned as Market Today, the closing edition, comes up right on your screens.
Welcome to Business Today Television. I'm Siddharth Zarabi, and joining me now to decode The fine print of budget 2024-25 is Neelkant Mishra, Chief Economist at Axis Bank and Head of Global Research at Axis Capital. Neelkant, morning. Welcome to the show.